Hi, and welcome back. This is the first page of our capital budgeting model. Here, we have most of the inputs we'll need when building the model. As you can see, they are well organized and easy to understand, which is nice. Okay, to start, we have the selected case input, which contains three options: 1, 2, and 3. The first option shows the best case scenario. The second one gives us the base case scenario. And then, when we've selected the third one, it will display the worst case scenario. It's great to know we want to build a flexible model with multiple scenarios from the start. Okay, below the selected case box, we have the expected long-term annual inflation for Italy and Vietnam. Why do we need it? Well, it must be factored into the price of production coming from these countries. Inflation of prices affects everything. Therefore, it is reasonable to expect that the price of products produced in Italy will increase by 1%, and the price of products produced in Vietnam will grow by 3%. The Italian economy has a lower expected inflation over the long term. Very good. Here, we have the price of production in Italy and in Vietnam. This is an output we've received from our business partners in operations and financial controlling. They have carefully studied the various costs sustained in Vietnam and expect the company will be able to realize €4,500 of savings per car, which is a considerable amount. When talking about the overall CapEx investment for the project, the operations team expressed significant uncertainties. Initial forecasts are around $350 million, but the operations team indicated this number could fluctuate by $30 million in either direction. This is why we'll have $350 million as our base case and $380 as our worst case, and $320 as our best case. We'll work under the assumption that the useful life of all CapEx investments will be 10 years, which is rarely the case in practice, but helps us reduce complexity without oversimplifying. Our inputs page contains information about the working capital figures observed in Italy. Given we consider production only, DSO figures are not included. The firm has a favorable net trading cycle in Italy, which means it can finance part of its operations with supplier's capital, given that DPO is higher than DIO. All right, scrolling down, we find information about the financing terms the company will use to finance the initiative. The firm will use a mix of debt and equity. We should remember that going forward with the exercise. The loan terms have been pre-agreed with the firm's bank. They will provide a loan that can go up to a maximum of €200 million, and the rest will be covered with equity. Top management has expressed the desire to use as much debt to finance this initiative as possible. Therefore, it would be best to assume €200 million will be invested. The interest rate of the financing facility is fixed at 5%, which is a little higher than current market rates, but gives you stability predicting future interest payments. The loan must be repaid according to the following reimbursement scheme. A huge help from the bank is that they agreed to forego interest payments for year 0. That's when the plant will be built. But there's always a but when we talk banks and financiers. We shouldn't forget a covenant banks added to the debt contract. If the production plant produces less than 15,000 cars per year, then the company owes a penalty of €1 million. That's a clause that bankers insisted on because they wanted to be sure they are financing a plant the company intends to use seriously. They will waive the covenant clause for year 0 only. This is when construction takes place and is impossible to produce any units. Okay, the tax rate we expect to pay in Vietnam is 30%. If earnings before taxes are negative, we will not pay taxes, but will assume the company cannot carry these tax losses forward. And last, the operations team has indicated that, according to their estimations, the plant's residual value after the 10-year projections will be $100 million minus the residual debt outstanding. Okay, these are the inputs, and it's a good practice we've organized them in the driver's page. That's a great start. In our next lesson, we'll work with the calculation sheet. Thanks for watching.